Good morning, traders. It's 8 a.m. Chicago time on Wednesday the 15th. Wednesday the 15th of June. Um, Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. For those who, there's someone who wrote yesterday and said, why do I have to keep reading that disclaimer? I'm a registered broker, floor broker, and a member of the exchange, and I'm required to state that when talking about futures in the markets. Um, I don't do much brokerage, though, just in case you're curious. Mostly a trader. Um, so let's look at what's on deck for today. The key element, of course, is the that it is Fed Day today. We're expected to hear from the FOMC, the Federal Open Markets Committee, at 2 o'clock Eastern, 1 Central. The market's pricing in about a 0% probability of an increase in rates. This is due mostly to the poor jobs report for May. May's jobs report came in way off, in addition to the fact that we have a British referendum coming in on June 23rd, which is expected to destabilize the market and has actually been responsible, supposedly, for a lot of the selling that has gone on. So overall, today is a tricky day because the market kind of puts on its positions early or takes them off or squares up. You see a lot of activity in the futures as hedges go up. And then it's likely to go into a holding pattern into that 1 Central, 2 Eastern announcement. And then after that, we get Fed's yelling coming on and speaking about having her conference on the FOMC meeting results at 2:30 Eastern, 1:30 Central. Before that, we do have industrial production here in about 10 minutes, cap utilization in about 10 minutes, expecting 75.2, industrial production negative 0.2%. We're also getting crude oil inventories at 9:30 Central, 10:30 Eastern. Crude oil inventories expected at negative 2.45 million barrels. The prior number was negative 3.226. Distillate inventories at 0. And gasoline inventory is expected at negative 200,000. This afternoon at about 3 Central, 4 Eastern, we also get the total net tick flows and net long-term tick flows into the U.S. economy. This morning we also have a slew of speakers from the ECB. At 9 o'clock Central, 10 Eastern, we have ECB Speaker Weidemann. At 9:30 Central, 10:30 Eastern, we have ECB Speaker Constancio. At 11:30 Central, 12:30 Eastern, we have ECB Speaker Costa. So there could be a lot going on there, but the key element again is the Fed announcement. Some news overnight: the Chinese central bank announced that it has. That the Chinese banks have lent out 685.5 billion yuan, which was above the 750 billion expected. This was for May. That comes out to about 150 billion dollars as the bank remains accommodative to stimulate growth in the Chinese economy. UK unemployment fell to an almost 11-year low. The national statistics data says that the UK's unemployment rate fell to 5% in April, its lowest level in more than 10 years. Additionally, the percentage of employed people climbed to 74.2%, matching the highest reading since record keeping began in 1971. Again, 74.2% percentage of the UK employed. So big numbers there. Let's switch gears here and look at what was expected yesterday versus what we got as a review. I want to remind you while I have you here, there is a webinar going on today. The link to the webinar is in the description of this video. I urge you to register for it. It's a convergence event on automated trading. We'll have a chance to interview two professional traders who trade an automated system and also run a hedge fund and a CTA based on that system. So they're as professional as they come. We're going to pick their brains on how they got there, what it takes to create a system, and so on. The webinar goes from 4:30 Eastern to about 6. So just be prepared to kind of drink out of a fire hose when it comes to that. I have a ton of questions to ask. Here's what was expected yesterday. Hypo 1, we're looking for the market to become responsive early, push into the prior day's range, and then rotate out of the prior day's range before pushing back in. So here's the initial move up, and I said 75 was the key test area. I expected it to rotate back down and then ultimately to go back into balance and push back up. That didn't happen. We got the early test up, we got the test down, and then it continued down, and that's where I said, I posted yesterday that if it cannot hold this 65.50 area, then it's likely to go to Hypo 2, and Hypo 2 was targeting the bottom of the singles here. Let me show you what Hypo 2 was expected to do here so you can see it with your own eyes. Here we go. So let's get that to high grade. So here's Hypo 2, initial push up, and then we're looking for a rejection and drop out of the prior day's range, and then a test of the single prints. The single prints extended a range from about 59 down to about 57. It was a string of singles from the 24th of May, and I expected them to get filled. Here's what actually happened yesterday. Here's what we got. There it is. So we got the move up. Couldn't quite get to the 75. Then we got the drop, and we pushed all the way down through those singles below. I removed the singles here because they are fully tested. Remember, the singles ran from about 59 to 57.5 or so, something like that. And we got down this yesterday. We got down to 54.70, 54.75, and then the market rotated up into the mid here and gave us a nice continuation rotation down on a double bottom. Got a double bottom yesterday on the end of the day. Double bottoms generally do not stay. Double bottoms generally do not last through the end of the session. This one did, and we pushed back up. Notice that the profile is showing a good taper at the top, lots of bulk in the middle, and a very sharp taper at the bottom. The market's really fighting to keep prices higher. And if you recall yesterday, I talked about the buyers needing to keep the 73.75. This area here is really important for buyers to hold on to, and they were not able to hold on to it. With them not being able to hold on to it, notice the overnight high is right at that composite LVN. And here's why it's important. It's important because, let me crunch this down a little bit. It's important because here's the pattern, the volume pattern going all the way back to October of 2013. The volume pattern is, this is the key low volume node before we start attacking 2042, which is the point of control of this composite. It's also 2042, 2040 is an area that has multiple confluences. Notice these black lines. These are points of control, MC points of control. Once we give up to 73.25 and stay below it, so today I'm looking for a test up to it and a continuation lower is a primary hypothesis. If we stay below it, then 42 becomes your key target. So those of you who are looking at weekly options and so on, you'll want to make sure your strikes are well below that. In fact, you want your strikes to be below the next LVN down. So you want them below 2013, which is also low for May. So that's the way it looks like. The market has transitioned down, has worked itself through this high volume node, has gotten through the low volume node, and we are finishing down here, and it's making its way down. So this is a natural process for the market to find buyers. It has to advertise prices lower to entice buyers, advertise prices higher to entice sellers, and the market's job is to get as many buyers and sellers to interact as possible. It is markets constantly seeking equilibrium, constantly. And so, since if it cannot find equilibrium, you get this, you get these moves that are trending, and the transition is generally a neutral day. So yesterday was not neutral. We broke the IB low, and we finished at the point of control, which is really an important indication that it is buyers are stepping in, and they're making an effort to push prices higher, meaning there are enough participants here who see these prices as fairly advantageous to get into. FOMC is going to change that. FOMC is likely to cause a revaluation here this afternoon, so I wouldn't commit too much to this analysis. But we have a weak low here. We have what looks like a W formation, and it's attempting to push higher. So there's a decent chance that we are likely to attempt higher and then make another push lower. I expect this W to fail, and I expect the double bottom statistic to prevail. So that's how things are shaping up. The next key area down is the mid of the gap below on the 24th of May at the 2045.50. Last thing we're going to look at is the overnight session to decide on how things are shaping up overnight. The market has mostly traded, most of the volume that has traded came in at the European session, and you can see here that we're migrating the point of control up on the overnight session, and we are just now giving up that area up there that we held on to throughout the overnight session. And so to me, this supports Hypo 1, which is likely to have an initial test higher or an open auction in range, and then I expect it to start giving it up and to start moving lower. So again, let me draw these hypotheses on the charts here. Hypo 1 likely to open, test higher, likely to be a choppy open actually, test higher, and then I'm looking for it to start dropping before the FOMC. Once we get close to the FOMC, look for balance, and then from there it's anyone's guess what it does on the FOMC, right? So that's Hypo 1. The initial test down, the key thing you need to know about Hypo 1 is a failed test higher and a push down into the lower region here. Again, 2060.50 would be the target, which is also the point at the high volume node from below. So we have a double distribution profile. I expect it to fail through the mid and test 2060.50 below. Okay, so that's Hypo 1. Hypo 2 is the opposite, open auction in range, test below, and then start pushing up and out of the 2073.75 in yesterday's range. That would be Hypo 2. Those are the key elements today. All right, so I'll leave you with that. Again, a final reminder. We have a convergence event this afternoon at 3:30 Central, 4:30 Eastern on automated trading. I don't do any automated trading, so I'm looking to pick the brains of two experts to educate us on how these algos work and how they're developed and so on. Good luck. I'll catch you this afternoon. Take care.